Welcome back to LutzTalk. I'm Austin Lutz. If you're new here, we're all about the real-world application of the tech that keeps the world connected, from 5G and AI to the collaboration platforms we use every single day. Today's guest lives inside one of the fastest, most data-dense environments on the planet, a trading floor in New York City, where milliseconds, market structure, and human judgment all collide at scale. Noah Holzberg is currently a trader at Morgan Stanley. Like others in his field, he came up through market operations, mortgage trading support, liquidity management, and market infrastructure. His previous roles include Bank of America and JPMorgan Chase, and before moving into alternative investment financing, and eventually onto the trading desk. Along the way, time studying at the Chinese University of Hong Kong gave him a front row view into how global markets behave across time zones, cultures, and regulatory environments. Noah has spent the better part of the last 6 years inside the plumbing of financial markets before stepping into the seat where trades actually happen. He understands not just what trades are, but how the data, capital, and people around those trades have to function for markets to even work. Noah, thanks for joining me.
Thanks for having me, Austin.
Love it. I've known you for several years now, and it's funny because, I wanted to get you on as one of the early episodes because I think the work that you do, and certainly with your background, relates to a lot of people. There's a lot of impact in the work that you do, and I want to kind of dive right into how you got to this point. I think, from studying global supply chain at USC, unfortunately, you're a Gamecock fan. We won't talk about that too much. But then transitioning into market ops, liquidity, and then, financing as a trader at Morgan Stanley today. Talk to me a little bit about that path. Like, did you always want to take the path of getting into finance like this, or where did it all start?
Yeah, so when I think back to college, Austin, I actually really had no desire to go into it. Studied supply chain with a minor in Chinese. I really wanted to be an industrial engineer, had internships in that. Then time came, graduated from college. I had nothing. I decided to move back to Charlotte, where we're from.
Yeah.
And got a job working in mortgage finance ops at Bank of America. Decided pretty quickly I wanted to do something analytical, and I had no idea what the hell that was. But I worked very closely with trading desks. And while quite frankly, I don't have necessarily the educational background that would lend to that, I knew it was a direction I wanted to go in. I really enjoy combining the people aspect of my role along with the psychological aspect combined with the analytical side. And that was something I learned pretty early on. And I think over the last 6-7 years, I've really been trying to pivot my career into a role that would allow me to have all of that. I think naturally trading is a really good intersection of all of those.
Yeah, you said earlier that your background didn't necessarily lend you to a role in trading. What does that mean? Like, what is a role in trading? Because I feel like, obviously the path that you've taken to get here is pretty in line with what you would think of with a trader. So talk to me a little bit about that.
Yeah, no, I think a lot of people who start off traders, we call it right out of undergrad, typically have more of a background in finance than anything.
Okay.
Maybe a risk management minor, but typically that sort of combination. They do internships in college, focus in that. It can be a very competitive pool to get into right off the bat.
Got it. Okay.
But it's a very mathematical heavy, especially in the risk side of trading, very quantitative heavy, and especially nowadays, very, very heavy in the coding environment, which again is something I did not have.
Yeah. So we talk about, success in a lot of different markets. I've had lots of different personalities the last, several podcasts, all the way from, from Meta to Vanguard to small business to huge IT firms. What does success look like in trading? I know the answer you would think of is just, are we making money? But is that a true metric for success in trading, or is that just the stigma?
I think in some capacity it is, right? Because at the end of the day, you're held to a P&L number, whether or not you're making or losing money. I think for this stage in my career right now, it's, am I going in and I'm learning something every single day?
Yeah.
Is there something that maybe I missed in a prior trade that I'm going back looking and discovering? Is there room to grow and improve? And well, I'm not going to achieve that. I am correct 51% of the time. I'm making money 51% of the time. There's a goal towards that, and achieving that goal is the long-term gauge for success, I think.
I mean, 51 is definitely better than 50, right? So, we talk about designing processes for failure before touching live trades. Mm-hmm. How do you look at that in terms of ensuring that the decisions that you make mm-hmm. are accurate decisions based on data, not gut feeling?
Yeah, unfortunately, I think sometimes there is a lot of gut feeling involved.
Okay.
I would say there's a lot of luck as well, but that's a story for a different time. I think in terms of processes, I think it's being able to sit back and understand what you're doing and reflect. And I came from a background that was a very process-heavy role.
Yeah.
My time in operations, my time in corporate finance and corporate treasury was very process-oriented and very process-heavy, which I think lends itself very well to getting into a mindset where you can go and say, okay, I know I'm going to execute X trade over the course of a day. I have a very standard procedure that I go through. There are things in the market that I check that I'm paying attention to that, depending on the name, the ticker that I'm trading, depending on what the market's doing, there are things that I look at in a certain order that I think lends itself to success.
And when you say, like, when you're looking at things, are you talking about like real-time monitoring cash positions and like global funding stress scenarios, or like what all does that include?
Sure. Yeah, no, definitely. I think so. We can definitely talk about what's going on in the global environment, if that's fine. So obviously right now the U.S. and Israel have been launching war in Iran. So today volatility in the market has been pretty high in recent scenarios. Paying attention to that volatility, paying attention to, quite frankly, even just news headlines that pop up. Understanding what subsectors and what industries are being impacted, you have to know that in real time because...
And those are like signals, right?
Exactly,
do we look at those as signals for the market?
Okay. 100%.
Okay.
So, for example, if all of a sudden there's a headline that the U.S. is going to allow tanker ships to pass through the Strait of Hormuz, I know oil is going to do X, Y, and Z. I know I'm trading, call it Shell or Exxon or any oil name. There are certain parameters that I'll look at in that lens.
Interesting. So is it when we look at this, right, you think it's pretty simple. If this moves here, what breaks there, right? Essentially, that's what it boils down to, but it's obviously a lot larger than that. Mm-hmm. So take a step back and walk me through, like, from a macro perspective.
Sure.
How do you analyze something like that from a data perspective? This is obviously an enormous amount of data that is coming in real time. You're watching the news, you're reading the news, you're watching, social media platforms, you're doing whatever you do, talking to people that you know. But like, what does that look like day to day?
Sure. So I think an important distinction to make is I sit within my central risk team in my group at Morgan Stanley. And so we focus on a lot of hedging activities. So what that means for us is there are what are called factors out there. And factors could be elements of a ticker, elements of a name that are impacting it. For example, one of the most popular ones right now is momentum. So if you think of all your classical meme stocks, more or less, all these names from Reddit that are being traded, they probably have high momentum, meaning there are a lot of people that are piling into them. You also have something called short interest. Short interest is the factor that is associated with people and funds that are short that name. And if a name is more shorted, it's people are actively shorting that.
Right.
So what we're doing is we're basically ingesting all of that data in real time and saying, okay, we know our momentum is too high, our growth factor is too high. At a top level, when there's billions of dollars being traded, how can we bring that down?
So you're taking that data and correlating that data into some sort of decision that gets made. But it's if you're just doing this, on your couch and you're looking at a stock or whatever and saying, okay, we can buy it for 20 cents, but we feel like it may go to 50 cents. And you buy that, you made $20. But the scale that you're operating in and that you've operated in is certainly much larger. So how do you know, and this goes back to the gut feeling comment, but how do you know that the decisions that you're making are based on data? And how much does that even matter?
Oh, yeah, I definitely think it matters. I think in a lot of these cases, it comes down to conviction and being disciplined in trading. You could put on a hedge, you could put on something that you think is going to protect you from X, Y, and Z factor. And ultimately, before you go into that, you need to have conviction. And a lot of that conviction comes from underlying data. It could be trends we've seen in the past. It could be you have a salesperson at X, Y, and Z bank selling you this basket of equities being a hedge in this case. They have conviction that they're going to protect you from the growth factor, the value factor.
Okay.
Combined with that, you also need to be disciplined in that if you start to realize a certain amount of losses, you need to be willing to be able to take that off.
Just take the exit and cut your losses. Don't try to win it back.
Yep, exactly.
Got it. And that's kind of like, where I want to take this conversation is like, finance structures for hedge funds and PE firms is like, obviously people aren't going to give you something for nothing. So when we think of trading, right, we understand like the sophisticated whales of the market ecosystem, and we look at all the data being ingested. Is there anything that's been changed in the last several years from your perspective that changes the way traders analyze what trades to make? And you might think where I'm going with this is artificial intelligence, but I think one of the key things that we've talked about before is that artificial intelligence has lived within finance in some form or another for a very long time.
Absolutely.
It just wasn't called that. It wasn't using ChatGPT 5.3. It wasn't using Claude and Opus and all these sophisticated models. These were models that were developed by people focused on trading and finance.
Yes.
Talk to me a little bit about that. How does that work from a quantitative perspective?
Yeah, I mean, again, I think we're still ingesting all of this data at the moment. I think specifically in the realm of AI, I think one of the really interesting things right now that's happening, and we've talked in the past about this, but AI is more being used to enhance all of the data we're bringing in. For example, we have all of this historical data on factor models and all of this data on, you could even equate it to being, hey, we've had Trump as a president before. We know that Trump does X, Y, and Z for the market. We have 1,008 trading days or whatever of him as a president. Here's what that looks like from an actual numerical quantitative standpoint and what he does to the market at X, Y, and Z times throughout the day. You can take all of that and layer that in.
And you think that is a factor, right? Like, let's say, for example, like 4 years of Trump's presidency compared to Biden's presidency, compared to Clinton, compared to Bush. Is that metric something you can depend on, or is it part of the composite that gets built when you make a decision?
I think if we're talking specifics for a second, I think it's more or less you can understand how a certain type of national leader, call it, so let's not even limit it to the U.S. presidents, how they impact their own local markets and global markets.
But the variables get multiplied, though, because you might have a situation where Trump is president or Biden's president or Clinton or Bush or Obama, but then at the same time, you might have 50 different presidents in other countries across Europe and Asia and, other areas. So it's like, just because at that time with the presidents and the data sets that we know doesn't necessarily reflect that if he's elected again or we have the same president, that you're going to have the same 50 people also working. So it's kind of like part of the composite.
It's part of everything is part of the composite. It's what I've come to realize over the last 6 months or so as a trader.
Yeah, because like we talked about this earlier, but understanding each layer from from a micro and macro perspective around trading has got to be the greatest advantage, right? Because you want to develop the edge in trading, and I think that's the game, right? Is you've got to figure out where the edge occurs and how much you're willing to you're willing to deviate from the entry point into a trade, and then where do you exit that trade? Right. And we've talked about this before, but you don't necessarily have to hit home runs, but you've got to get on base. Right. And that's the difference between successful traders and people who are unemployed in the trading space, is that consistency trumps home runs every day of the week.
I couldn't agree more, again, especially coming from an operations background. Yeah. I think having that mindset of building a process, understanding your process and learning that if you A, deviate from the process, what happens, or B, if you need to refine that process, how you go about doing that. I think that is a massive, massive indicator in your success as not only a trader, but quite frankly, most fields in life, I think,
yeah.
Honestly, again, the more I delve into it, the more traits and more parallels I see in trading to real life and anything. A lot of it's a very psychological game.
Yeah, I thought about that too. When we talked about the starting the podcast, and consistency is everything.
Yeah.
I think doing something consistently. Now you can't just do consistent bad work over time, but you've got to do it consistently enough to feel confident that your future success is built off of that.
Agreed.
So I'm actually curious, when we talk about, markets being pipes, people, and data, and not just charts, I'm just trying to understand how, systems break makes you, the best person to operate when they are running. So we talk about you being a trader, but what makes you qualified to be a trader? We talk about your background and starting out early and transitioning into finance, but what truly quantifies you as a trader?
Yeah, no, I think that's an awesome question. I think that's one I'm still trying to understand every single day.
Sure,
it could be a little bit of imposter syndrome sometimes.
We all have it.
Yeah,
I think you have to believe in yourself before anyone else will.
Well, I have to be honest, I think that's actually a really big part of it. I think having conviction in yourself, formulating a hypothesis, again, my team focuses on hedging.
Yeah.
Understanding what hedge is going to do, having conviction that the market will react in X, Y, and Z way, and this is why we're putting on a specific hedge. You have to have conviction in that. You also have to be quantitative savvy or quantitative heavy. I mean, it's people, I think, especially people at home. You see all these traders on Reddit and they're making tens, 20s, hundreds of thousands of dollars on, I'm going to say vibes.
Right. Yeah. It's you've seen the Twitter X post, I put $200 in the Poly Market account and turned it into $200K overnight.
Yeah.
Here's how I did it, and then when you go look at it, it's mostly slop. It's no one's really talking about how that works.
It's luck, and luck is awesome.
Yeah.
Don't get me wrong, luck is awesome, but you need a repeatable process. You need conviction. You need to be able to understand the data.
Yeah. And
then formulate your own hypothesis.
Yeah. Yeah, and I think it's interesting because we look at the markets here in the United States. Right? The United States markets are heavily swayed by international relations.
Yep.
I think people put a lot of stock into what the U.S. is going to do based on, what wars we're involved in, and what the oil price is, and what's going on in India and China. You spent time at the Chinese University of Hong Kong. How does that change your ability to look at a U.S. market and be able to make decisions based on what to trade and when to trade it, compared to somebody who never had that chance to work in a different market?
Yeah, no, 100%. I think, so it's a fewfold for me. I think, one, I'm particularly interested in the Asian markets.
Yeah. And you speak a little bit Chinese, too.
I do.
Right?
I took Mandarin for 14 years.
Yeah, nice.
Having spent some time between China and Hong Kong, the Asian markets in general interest me, and I think today was a really good example of that. So one of the main Korean index, the Kospi, overnight last night, the index tanked, I think around 12%. It tripped a circuit breaker. Trading was halted due to what was happening in Iran.
Okay.
And so I walk into the office at 7 in the morning. I sit down. I see that Kospi had its worst day on record, the Korean markets, and I say, shit, what's happening in Korea? I know that a lot of Korea and a lot of that actual index in their economy is linked to memory names and AI names and semiconductors, and I know that a lot of that technology is based around there. So I'm saying, okay, wow, I think based off what happened in Korea, and the Asian markets do trade very differently than European and US markets, but that could be a broader correlation. We can take Samsung as an example. Samsung is a
South Korean,
massive South Korean corporation.
Yep.
I think they were down around 2.5% or so yesterday. pretty substantial.
Yeah, that's a lot.
Out of the realm of normality, but pretty substantial. I now have to say, okay, great. What other names are correlated to this, and how is this going to impact my broader portfolio?
And in your role, are you doing like? Is it what you think of when you think of like the stigma of a trader, where someone's sitting behind a desk looking at monitors and like they see the news and they're like, oh man, what companies are like, South Korea? Like, do I need to go search for these? Or is data getting fed to you through pipelines for you to be able to make better decisions in real time? Like, that's really, definitely, I think, part of the game, right?
Yeah, we rely on a lot of systems, a lot of risk management systems, a lot of our own internal applications that we use to actively monitor different components of risk.
Sure.
And it's not like you see trading on vibes, trading on
like Wolf of Wall Street kind of style, where they're like all screaming on the floor and they're putting paper trades in the bucket or whatever. Like that's obviously that was in the 80s and 90s.
Well, something that definitely does happen. So we have an actual sales and trading floor. I work on the investment management side of the business.
Okay.
And so it's a little bit smaller on my floor. We still have like an actual trading risk group.
Yeah. That
again we focus on all of our hedging with. But down to the trading floor, people are definitely screaming at each other.
Is it like what you see or what you've seen before in imagery, where it's like you're on Wall Street, you got like the big TV screens, and the people are all with their hands in the air, holding tickets, trying to buy. Like
down at the exchange, it is.
Is it really like that?
Down on actual on Wall Street, on the exchange floor at 100%.
Wow. Okay.
Or I wouldn't say people are still. It's still a cluster.
Okay.
But
there's still like people like up and around and like.
If you go down to the trading floor, which is just little rows of massive monitors, and people jammed tightly together like a sardine can, people are still standing up and screaming at each other and yelling, and it's still pretty crazy. It's a little more tame up where I am.
Yeah. Must be different from. I was gonna say you're kind of sitting in the. We're getting ready to have coffee vibes. And they're like, we're going to trade, hundreds of thousands or millions or whatever, tens of millions, in NVIDIA stock.
Right.
So that's interesting.
A little more tactical on my side rather than what's called like flow related, where on the sales and trading floor, a lot of them, like the broker dealer, are taking inflow from different clients and internalizing that, passing it off to different clients. Depends on the book.
Do you see when we look at the transition that you've had the last 8-10 years, when you look at the broader scope of finance, do you find that more companies kind of do the same thing just with different talent, or do you feel like each company represents a different group of people? So, like, for example, you might look at BOA and say, maybe BOA represents more of like, conservative trading. And Morgan Stanley or, JPMorgan, they represent more of like a moderate. So like, what does that look like in terms of, risk?
I think from the trading risk side, it's all pretty relatively similar in that aspect. There's a lot.
It's like the Walmart, Costco kind of like. They're all doing a lot of the same thing, but there's preferential.
Exactly.
Yeah. Okay.
A lot of the talent is recycled on Wall Street. If you go to different desks, you'll find that a lot of these people worked at a lot of the other banks. Mm-hmm. Now, if you want to look at it like a top of house bank view, I do think each bank has a niche that they focus in.
Yeah, I agree with that.
And they do the things well. I think from a trading perspective, it's reputations. Each bank has their own reputation, but I think it's pretty well.
Yeah.
It's similar enough.
Yeah,
I would say.
Yeah, I mean, because you look at like JPMorgan, they'll give you a car loan, they'll give you a home loan.
Yeah,
they won't give you a home equity line of credit, right? Bank of America, they'll give you a home loan, they'll give you a car. Truist, they do it all. So there's different products at these banks, and I hate even mentioning the word product because it feels like such a most like just terrible tone of society.
Going from someone who was going to be an industrial engineer working with physical, tangible products and now working as someone who has to talk about what they're doing in terms of products, it's still unbelievable to me.
Yeah. I mean, I've heard people talk about like, yes, we're developing a new product and we're gonna do a 15-year mortgage, or we're gonna do a 7-year variable APR mortgage, and they're calling them products. And I don't know if you saw this past week, the McDonald's CEO did his infamous video where he's on camera on social media talking about the new burger that they had, and he takes a bite and he's got a little cringe on his face, and he's like, I love this product. And when I saw that, I thought, man, like this would be a really great conversation piece in the in the pod with Noah, because I feel like sometimes businesses get so like disconnected from who they're actually selling to. They come up with these things like a mortgage is not a product. It's a product is something tangible.
Agreed.
And I don't feel like me having a good credit score and going to Morgan Stanley or JPMorgan and saying, hey, I need a home loan. They're like, we've got a couple great products for you, right?
Yeah.
That conversation doesn't come up organically.
As a consumer, that doesn't sit right with me. As someone who's worked in the industry for years,
you don't go buy a car and they're like, I'm going to put 20% down and I'm going to finance the rest, and they come back to you like, I talked to my sales manager and we've got a great product here for you. It's like, no, the product is the car. I'm buying that.
Yeah.
What can you guys do to help me finance that?
Mm-hmm. It's an interesting corollary there. It's as someone who's been in the industry for, I guess, 7 years now, and I started off in mortgage finance, so working really quickly, like closely with mortgage loans and mortgage products.
Yeah, I feel like that's a natural like entry into like good like people don't not pay their mortgages, right?
Yeah.
So it's kind of a nice little I don't want to say safe, but it's safest in the finance space.
It was an interesting way to start my career.
Yeah,
I learned a lot, but still, it's identifying something as a product to me in the world of finance still is it's just funny to me.
It's so impersonal. I don't know why.
It's very impersonal.
I just don't know why that happens.
Yeah.
Talk to me about, and this is kind of the fun part of really where I want to take this is, for those listening, is there an actual opening bell for the stock market like you think of when you think we're starting trading? I get notifications on my phone from Robinhood and from other apps, and it's like, all right, trade opens in 5 minutes. Mm-hmm. Do you guys actually hear a signal, or what does that look like?
Yeah, so as the junior guy on the desk, I have I would say an 8-inch diameter gong that I smack the hell out of each morning, right at 9:30 on the dot every single time.
Love that.
The rest of my floor does not love me, but still love you.
Yeah, that is too funny. What would you say in your time with being a trader was the most stressful situation that you've ever encountered? I mean, you don't have to go into specifics, but I think when we talk about stress, I think there's different levels of stress, like, I'm going to be on vacation and I can't cut my grass.
Right. So
now my grass is going to be high. I might have to worry about the HOA or like, I forgot to put the trash can. Like, it's stressful, because you don't know what the next week's going to look like.
Yeah.
But like, for those listening, like, compare that to what you deal with daily. How does that compare?
So I think when you're dealing with a lot of order flow at the same time, order flow being I have an X, we'll just use an arbitrary number here, call it 10 trades. I know I need to trade in the next short duration of the day. Mm-hmm. Getting all those trades out to market. And let's just say there's a few of them you set limit prices on. Say I want to buy, call it SPY at X price. I set my limit, and setting it in the wrong spot and missing out on a bunch of potential profits. So like,
meaning, and for those not familiar, limit meaning like you say you're going to sell that at a specific dollar amount, and if it doesn't meet that dollar amount, it doesn't get sold, but it could go down, and then you lose out on potential profit.
Exactly.
So you need to find out exactly what the limit price should be to be able to make sure that you have returns.
Yeah, exactly. And also, like, in addition to that, I call it trading like wrong way. So like I can be trading a bunch of names at once, and I'll see like, I'm supposed to, in my mind, I'll see a name and say, okay, I'm looking at the ticker, I'm looking at the price, I'm saying, okay, shit, I'm selling this name, when in reality I'm actually buying it, and I'm looking at the price in terms of selling instead of buying, and so I miss out on a lot of price action that I could have bought lower, but in my mind I was like, shit, I'm selling this name because I was moving too quick. And you can still salvage that, and it's all good at the end of the day. But
it's lost potential, though.
It's lost potential. It's lost potential. I can still get the trade executed at a better price than I originally would have. Just had I realized 3 minutes earlier, I could have executed it a good amount.
Got it.
And that doesn't even happen too often, but like that is a stressful situation when you have millions of dollars of trades at market and there's a lot going on. You're getting headlines blasting in your face. It's information overload, and that can be stressful sometimes.
Yeah,
fun though.
Yeah, I think one of the things that normal people, and I say normal like the couch traders struggle with is low liquidity.
Yes.
That certainly doesn't feel like a problem
it can be a problem
in the trader market. I think the ratios are very different though. Like for example, if you have a couple $100 that you trade in a Robinhood account, and you buy based on vibes, and you read a couple news articles and you feel good about a specific stock, and because you've done minimal research that earnings get reported tomorrow, and you think based on a news article from Reddit that stock's going up, so you buy, right? So you buy, you make 20%.
Right.
Great. Awesome.
Yeah.
Next day, the market takes a dip, you lose all of it, and then 20% more. Is low liquidity a problem when you trade at the scale that you trade at?
Absolutely. Absolutely. No questions asked.
Yeah.
Usually in the form of like niche ETFs or a lot of these very niche names there's just not a lot of trading volume. And so you'll find that when you're going to hedge and you're using a very specific hedge on that, you can absolutely impact the price of the stock. So if I'm selling,
meaning buying too much of it and then moving the market
more so like we'll use buying as an example. So let's say I want to buy 100,000 shares of X, Y, and Z ETF. It only trades 1 million a day. These are all theoretical numbers here. I'm 10% of the daily trading volume. If I'm buying, I'm going to be driving that stock price up. I'm going to keep smashing that ass, and the price is going to keep driving up and up and up and up.
Sure.
It's just a very negative cycle if you're perpetually buying higher because you're 10% of the volume. So you have to be very cautious of because
you don't know what else is going to get bought during the day. Because if you eat up the 10%, then the people that would have bought in that day are not buying.
So liquidity is something we look at a lot. Like looking at your average volume at time, your AVAT is super important because, if that ETF trades or that basket only trades a million shares a day, but all of a sudden it's 10:30 in the morning and I see it's trading at 180% of its average daily volume.
Yeah. What does that tell? I mean, that's a signal, but what does that tell you?
That's telling me that it's very active. More people are trading it for whatever reason. You can interpret that any million.
Could be random luck. Could be just, a news article that came out that said, hey, you should buy this. Could be, what is it? There's like a famous newsletter that goes out, like the Penny Fool or something like that.
The Motley Fool. It could be like anything.
Yeah.
It could be, it could literally be anything. And then understanding, I'm trading 100,000 shares. I see instead of 1 million shares being traded today, it's really 5. I know I have way more liquidity. I'm sorry.
Yeah.
I can blast into that name if I need to. And I'm going to impact the stock a lot less than I normally would.
Interesting. Yeah, that's it's definitely an interesting take. I've been personally playing around with some automation around, and again, I'm not a trader. I don't really know a lot about trading and what constitutes, buying and selling stocks. But as the last several weeks, I've been working through understanding entry positions, when to exit, understanding you don't have to always hit home runs. And then obviously slippage is a factor in the way you enter markets. And then you've got back testing, standard deviation if you're taking data that's variable. So for example, if you're trading climate data and you know that climate data settles on a certain station and that station forecasts a specific temperature, but 99% of the time they're off by 2 to 3 degrees.
Right.
Your standard deviation is 2 to 3, but if you take that data and you apply that in a systematic way, that will work until it doesn't. And then all of a sudden you've got this model that exists that is trading with the wrong data.
Yeah.
And, I think we've talked about this before, but something that may work for a month could potentially stop working one day and never work again because the market has shifted. And I think that is where we see like humans in trading is like being able to understand those patterns and retune what the entry points are and when do you exit, like, because markets are so fickle, with all the macro and microeconomic viewpoints. I just don't think we're ever going to get to the point where we don't have some sort of human oversight in trading to be able to pass the sniff test, if you will.
No, I couldn't agree more.
Yeah.
I think we talk a lot about this on the desk, is that if the trading desk now is 5 people, it may in the future be 2 or 3, accompanied with AI, accompanied with all of the resources we now have at our disposal. I mean, it's never going to take away that human intuition.
Yeah.
And I'll even go so far to use this example is, take work aside, we're able to freely trade ETFs on a personal account.
Sure. Makes sense.
One of the things we look at is the volatility index, the VIX.
Mm-hmm.
When VIX hits a certain point, we know that there's an ETF that's negatively correlated to that SVIX. We know that when VIX is at 25, SVIX is going to be at 17. I'm going to go buy a ton of SVIX. And I know that the VIX volatility index will always hopefully go down to around 18, 17, 16, somewhere in that range.
Sure.
And SVIX will do the inverse of that. It will go up. And so obviously I'm going to buy low, sell high. One of the trades I did on my personal account the last few days with everything going on in Iran, me and some friends have a model we use to look at that for our personal accounts. And typically we stick to the script, stick to the signal, as we say. I had a weird feeling today that volatility was going to go back up tomorrow morning.
Mm-hmm.
I offloaded my entire position, and I don't know whether that's going to be right or wrong until I walk in tomorrow.
I was going to say, we'll find out in 12 hours. I mean, you're going to know pretty quickly.
I'll know pretty quickly. And if the signal worked, and then it's a great use when AI is a fantastic supplement. If not, then human intuition wins.
It's funny too, like, tying like work into personal life, because like you develop a hobby, for the things you learn at your job.
Yeah.
So like I do all the things that I talk about in my job at home. I'm building home, lab servers, and I'm working with AI, and I'm, writing some code and doing all these like, interesting little side projects. But like that all kind of comes together in the bigger picture of the work that I do day to day. And I think it's just a good representation of you doing the same. It's just with finance, and I'm doing it with computers and IT and AI.
No, I love what you're doing. It's awesome. It's great when, and I think you'd definitely agree to the sentiment. It's great when we can go to work and work on something throughout the whole day, and then be able to transfer that to our personal lives and just get to. It's I think the dream for a job.
It's like not having a job. I tell people all the time, like it is really rewarding to be able to go to work and get paid to do something you actually like to do, something you would do in your spare time.
100%. It's a blessing.
What is one habit, Noah, that you do every day to make yourself successful? And I don't mean like I get up and I brush my teeth and I go to the gym or this, that. Like, what is something that you consciously think about that you do consistently that you that has gotten you to this point to where you were afforded the opportunity to interview and become a trader, and you consistently are successful in your job every day?
Yeah, I think it's a mindset, and I guess what I mean by that is I have a goal in my mind of what I want my end goal to be in my career, and I wake up every morning and I say, shit, whether I'm doing what I want to be or not today, this is where I want to be. What choices can I make today that will make me a better person in the future? And so I actually, side note, just finished reading a really good book that delves into a lot of psychology of, it's really honestly about people pleasing, but there's a lot of aspects that I took away, and one of the big things is it's really like you have to live your life in the here and now.
Mm-hmm.
And I think I took a lot of that, especially recently, and said, what can I do today to make myself a better person, a better trader, a better employee, a better boyfriend? What can I do today to make me a better that today and going forward? And so I think having that vision in your head, knowing is that, okay, well, I want to read 20 pages every single day of a book that's either related to work or not, and just absorbing knowledge. I think just for me, it's having that mindset.
The consistency model of like finding something you like and then sticking with that till the end.
Yeah, and I think it's probably a pretty cliche answer, but it's in my mind, it's always having that vision to work towards, and then always just achieving that.
Yeah. No, that's interesting because I think, most of the people that I talk to, I mean, I'm friends with, they have good habits. And I think, there's certainly people that I'm friends with that don't have good habits. Doesn't mean they're not successful.
No.
But I think, in the majority, most people that, that I'm friends with, that I talk to, that I'm planning to talk to for future episodes are people that I respect because of the fact that they're consistent enough, not just in their careers, but like in their personal lives to do the same thing day in, day out. We have a mutual friend, just one of the most consistent guys that we know. And I think,
hands down,
having that trait is something that translates well into jobs like this. Whether you're a doctor, finance, IT, whatever it may be, showing up every day is more than just being physically present.
Yes, it's having that mindset, and whatever that is, just sticking to the vision. And if you have to revise that vision, that's fine too. Just having, I don't know, that's what's always helped me, I think.
Yeah, for sure. Well, this has been amazing, Noah. I wanted to just give you just a second to kind of go through, and if there's anything you wanted to cover, anything you wanted to ask, we can do that. Otherwise, I'll go ahead and close this out.
No, definitely. I guess from your mind, and we've talked a little bit about this today. What's your take personally on AI taking over? At least a lot of from what you know about the finance industry. Like, I guess. And as someone who works in it, I have my opinions, but I'm curious to see, like, what from your perspective, what do you think?
Yeah, I see it every day, and I talk about AI, not being the headline anymore.
Yeah.
Delegation, I feel like, is kind of the next chapter in the way AI works. AI is so powerful because, 6 months ago we didn't have models that could do full one-shot application builds, where you could take natural language and then translate that into a fully working Postgres database wired up to a React front end.
Right.
Today, you can do that. Anybody that has a keyboard can go and say, build me an iOS app that pulls the weather. If you have any sort of, understanding of how the plumbing works for applications, you can do that. 10 years ago, that didn't exist. I mean, you were bound by the syntax. And if you didn't understand the syntax of writing code, then you were pretty limited in what you could do. You were beholden to, I use the term syntax masters, essentially. They kind of kept you tied up because it was, as an idea person, I look at myself as like someone who's got lots of good ideas, but historically I've never had any way to execute them. I can write a little bit of code, but I certainly am not a software developer in the sense of like.
As I've heard you say.
Yeah, I think it's pretty clear, where my skill sets lie. But being able to understand the needs and then correlate those needs into natural language is going to be the next path for people in our field.
So then, follow-up question for you that I've been wondering is, you obviously are extraordinarily well-versed in so many different areas. I think there's a lot of people who are going to be listening in to these podcasts who are involved in a lot of different industries. What's one piece of advice in your mind you'd give? Like, what's one skill you would advocate that everyone learn, no matter industry, just to survive in the modern world?
Yeah, I'll answer that with two statements.
Okay.
One of the things that I certainly have started to adopt more in 2026, and I've said this several times, is, you're never going to be able to take that next step if you're not willing to be vulnerable. Okay. I started this podcast, a month and a half ago. Before that, I started a blog. It was really just at the end of 2025, I wanted to kind of be more present and show up. To the community. I released episode 1, and I talked about, for a long time I had a lot of really smart people that were mentors to me, and along the way, I realized that I wasn't sharing a lot of the knowledge and like, what is the market looking like? What is the future looking like? The same things they did for me, like one-on-one. I wanted to be able to take that and, give that back to the community.
That's awesome.
So you asked, and this is part 2, what advice would you give? It's kind of cliche, but the old adage of pay it forward.
Yeah.
People say that for a reason, and I think as you get older and as you get more well versed in a specific area, as you gain more experience, don't be afraid to introduce concepts and help other people out and empower them to go out and do things on their own. Like, everyone used to be afraid of people taking their jobs by having historical knowledge.
Right.
I don't think that's going to be the case anymore. I think everyone's job is up for debate now
Sure.
that AI is in the picture. I think there's a human element that we have to retain, and the only human element that we can retain is being able to pay it forward.
Yeah, 100%. I love that. I think that's awesome. I'd agree with that, and I'd also add being able to be your fully authentic self anywhere you go. I think is
it's powerful.
It's powerful.
Yeah,
and it's really powerful.
Yeah, I totally agree. Well, I just want to go ahead and close this out with a big thank you to our guest Noah for spending time and sharing his experience, and to everyone listening. I'm Austin Lutz, and this is LutzTalk. Until next time.